2025 has become the year where the global economy split in two. As new tariffs disrupt traditional supply chains and redraw the boundaries of trade, investors are witnessing a massive realignment, not just in policy, but in the very architecture of global tech. From the US to China, companies are scrambling to localize, fortify, and decouple. And in the middle of this geopolitical reset, a select group of American tech giants are quietly emerging as the biggest beneficiaries. BlackRock's CEO Larry Fink recently put it bluntly: "We're seeing the rise of economic bifurcation. National security, energy independence, and digital sovereignty now shape how capital flows." That statement isn't just philosophical, it's financial. In a world where tariffs are permanent, AI demand is exponential, and data is the new oil, the winners will be those with secure US-based infrastructure, government-aligned priorities, and the ability to scale globally without relying on vulnerable overseas supply chains. And that's where today's story begins. We're diving deep into 3 stocks that are built for this bifurcated world. These aren't just legacy names or speculative plays, these are companies powering the next generation of data centers, AI workloads, cloud platforms, and secure compute, all anchored in America and all aligned with the digital priorities of this new era. In this video, we'll break down how each company is positioned to thrive in the face of tariffs, trade fragmentation, and surging AI demand, and why hedge funds and institutional investors are rotating capital into these exact names. If you want to find opportunity in the chaos, this is the strategy to watch. Let's get into it. Let's begin with Oracle Corporation, ticker symbol ORCL, a company that's gone from being a legacy software giant to one of the most compelling AI and cloud infrastructure stories in tech. For years, Oracle was considered a slow mover in the cloud race, but that narrative has flipped, and flipped hard. Thanks to its Oracle Cloud Infrastructure, or OCI, the company is now growing cloud revenue at over 70% annually and rapidly gaining market share from cloud heavyweights like AWS and Azure. The reason? Performance and pricing. OCI runs faster, uses fewer resources, and costs less, and for large enterprises, that's a winning formula. But Oracle isn't just chasing hyperscalers, it's also dominating in the AI database space with its autonomous 23 AI platform. That product uses advanced vector technology and minimal human labor, making it not only more secure, but tailor-made for AI workloads. Beyond that, Oracle's business apps, Fusion and NetSuite, are quietly becoming leaders in ERP, growing at around 20% annually and beating out legacy players like SAP and Dynamics. And it doesn't stop there. Oracle is playing the multi-cloud game better than anyone. Its deep partnerships with AWS, Azure, and Google Cloud let enterprise customers run Oracle's databases across multiple cloud environments, something no hyperscaler can offer natively. Of course, scaling this fast comes with costs. Oracle is pouring billions into new data centers, which is weighing on free cash flow for now. But management has been crystal clear. This is a short-term trade-off for long-term dominance. With a $138 billion backlog and a 100% RPO growth forecast for the year, the revenue visibility here is exceptional. In a world where AI is transforming every industry, Oracle has planted itself at the center, powering infrastructure, software, and databases alike. While short-term margins may fluctuate, Oracle's position as a foundational AI and cloud company looks stronger than ever. Next up is Broadcom Inc., ticker symbol AVGO, a company that's rapidly becoming a cornerstone in America's AI infrastructure boom. While many investors look to NVIDIA as the face of AI chips, Broadcom is building the arteries, the high-speed, scalable networks and semiconductors that make hyperscale AI possible. At the center of this effort is Broadcom's Tomahawk Ultra, the world's first 102.4 terabit per second switch. It's not just fast, it's redefining what's possible for data centers under pressure from AI workloads that are growing exponentially. Here's what makes this story even more compelling. Broadcom isn't trying to beat NVIDIA at GPU compute, it's carving its own lane in Ethernet switching and custom silicon that hyperscalers like Google, Amazon, and Meta increasingly depend on. As AI models become more complex, these companies need scalable, high-bandwidth infrastructure. Tomahawk Ultra delivers exactly that, and it does so with better performance per watt and per dollar than traditional GPU interconnect solutions like NVIDIA's NVLink, especially for large-scale distributed AI workloads. Beyond hardware, Broadcom's infrastructure software segment has also taken off, posting triple-digit growth this year after a slower 2023. This isn't a pivot, it's a dual-engine growth strategy. Add to that deep client relationships, Apple accounts for over 13% of sales, and Samsung over 21%, and Broadcom isn't just participating in the AI revolution, it's helping build its foundation. Yes, there are risks, tariffs, chip competition, and regulatory headwinds. But here's the bullish view. In a world where hyperscalers are planning to spend over $320 billion on AI and data centers by the end of 2025, Broadcom is not a vendor. It's a strategic partner. With rising margins, rebounding revenue, and a product suite built for scale, Broadcom is quietly positioning itself as the infrastructure kingmaker of the AI era. In a high-stakes trade war environment, that kind of relevance is priceless. Now let's talk about one of the most misunderstood and potentially most explosive AI infrastructure stocks on the market, Supermicro Computer Inc., ticker symbol SMCI. This isn't your typical chipmaker. SMCI builds the backbone of generative AI, modular, energy-efficient servers designed to house NVIDIA's most powerful GPUs, like the B200 and the soon-to-be dominant GB200. In fact, SMCI was the first to ship the next generation of AI platforms, giving it a rare first-mover edge in the AI server market. And with NVIDIA's Blackwell ramp accelerating, Supermicro is perfectly positioned to ride this wave, not as a sideshow, but as a critical supplier. Yes, earnings guidance has been soft, margins are under pressure, and the company is still recovering from the cloud of a resolved accounting investigation. But here's what smart money is starting to notice. SMCI's cash flow is exploding. In Q3 alone, it generated over $600 million in operating cash, its strongest in years. The company is rapidly expanding manufacturing capacity in Silicon Valley and Mexico, betting big on long-term AI demand. That's not a defensive move, that's conviction. Technically, the setup is looking bullish. Momentum is building. A golden cross just formed on the 50 and 200-day SMAs, and short interest remains elevated, creating the potential for a powerful squeeze. Analysts tracking the stock see a triangle breakout pattern forming, with upside potential of 50% in the near term if key resistance levels break. Look, SMCI isn't for the faint of heart. It's volatile, misunderstood, and still heavily shorted. But in a high-tariff, high-performance world where US firms are racing to onshore compute and server capacity, Supermicro is becoming the go-to US manufacturer for AI hardware. This is the type of overlooked stock that thrives in chaos and punishes those who bet against America's ability to scale AI infrastructure from the ground up. In a world where tariffs are rewriting trade maps and AI is redrawing the future, one thing is clear: not all tech is created equal. Companies like Oracle, Broadcom, and Supermicro Computer aren't just reacting to change. They're building the infrastructure that will define the next decade of American innovation. While others scramble to adapt to fragmented supply chains and shifting policy winds, these US-centric tech leaders are leaning in, with resilient strategies, scalable platforms, and national alignment. This is more than just a market rotation, it's a structural shift, and those who understand the new rules will own the next cycle. If you found this video insightful, make sure to hit like, subscribe, and let us know in the comments which of these 3 stocks you're watching. Until next time, stay sharp, stay informed, and stay ahead of the trade reset.